Welcome everyone to part 2 of Commonomics USA's presentation, co-sponsored by the Baltimore City Greens on public banking and economic justice. Last week we discussed the basic concepts of public banking. This week we're going to discuss implementation, political strategies, and arguments that are commonly made in criticism of public banking and arguments that can answer those arguments. If the other participants on the call can put themselves on mute as we get started here, that would be very helpful. In between each of the 3 sections here, I will pause and take questions, and we can talk about anything that people have questions about. And so again, my name is Matt Stannard. I'm the Policy Director at Commonomics USA. Andy Ellis and I have been working to put these presentations together. We hope that they're helpful for people in Maryland to learn about public banking, and particularly to learn about the underlying values and how public banking can implement some of the underlying values of those of you who are concerned about economic justice, social justice, issues of equity, issues of building a new economy that's fair to people, and building a new world. And so we're happy to be part of that. In Commonomics USA is at commonomicsusa.org. You can also email me at that address, just matt@commonomicsusa.org, and I'm happy to talk to anyone who's interested in these issues. And we also deal with worker cooperatives and public options and anti-privatization stuff. And so we're very much about the commons. We think public banking is a banking plan that is based in the values of the commons. Last week, the first half of this webinar, which is now available on YouTube, and you can just talk to Andy about getting a link to that. Last week we talked about public banks in a conceptual way. We pointed out and talked about how Baltimore, as many other cities, but in many ways uniquely Baltimore, has been particularly victimized by the big banks, by big private banks. We talked about how banking ought to be conceived of as a public utility rather than being conceived of as a mechanism for private profit. And that's because banks have the power to create money. Just to be very stark about it, banks have the power to put additional money into the financial system through their method of lending. And when private banks do this and charge interest, they're essentially extracting money from the rest of the economy based on money that they've created. That's a tremendous power that they have, and you add to that the power of being able to risk public money as cities and counties and states have to put their money somewhere. They put them in private banks. The next thing you know, there's a derivative or interest rate swap or something that goes south, that goes bad, doesn't, loses money for those municipalities or states, doesn't lose money for the Wall Street banks. It's an unfair system, and it's part of the reason, along with redlining and along with just a lot of other bad private banking practices, including criminal practices, that Baltimore uniquely and many other cities around the country are in real trouble and have in many ways been destroyed and devastated, have had huge sections of their economy hurt by banks. On the other hand, a public bank can use that same power, generation and circulation of money, and use of debt, and transform a community. If it's done right, it can transform a community into a community that is based on a much more cooperative and sustainable version of the economy, but also has the money, has sustainable abundance or sustainable prosperity in that it can target investment in the places in those local communities that need investment. They can do that by lending to small businesses and farms and nonprofits. They can also lend to the government and save billions, potentially billions, and sometimes more in interest rates and fees. for those local governments. And they also pay a dividend back to those governments, and in so doing, make more money for the communities in the process. We talked about all of that last week. Today we're going to talk about the creation and implementation of public banks. That's different everywhere. We're going to talk about that. We're going to talk about political strategies and things to keep in mind, and also answering arguments of the opposition. I want to talk about this because I have seen public banking campaigns in several states and in several cities, and we haven't had a successful public banking campaign, if you will. We have not created a state-owned bank or a government-owned bank with the type of power that we're talking about since North Dakota in 1919. And so we are trying all over the country to do this. 30 states and dozens and dozens of municipalities have campaigns just like this. They're all unique in their own ways. Your campaigns in Maryland would also be unique in their own ways, but we can learn from one another and figure out how to push this forward. And those are the things that I want to talk about today. Creation and implementation of a public bank. I'm talking about things like legislative or city council sponsorship, depending on where you're doing it. Enabling laws, that is creating laws that enable the creation of a public bank. Feasibility studies, which are both very promising and helpful, and also very potentially cumbersome and disruptive to movements. So we want to talk about the unique role of feasibility studies. Also, capitalization and collateralization requirements. We'll talk about Maryland's requirements in that regard. And finally, just go through the importance of chartering, of what goes into the charter of the bank. This looks like stuff that obviously, you could take a semester-long course for each one of these subjects. And so this is the beginning. This is to kind of introduce us to the lay of the land and the types of things. And if you have experience in municipal or state government, or working or lobbying, or agitation of any kind, a lot of this will be familiar to you. Sponsorship just means who is going to, what elected official is going to introduce the legislation or the ordinance. Ana Sol Gutierrez of Maryland's 18th District was the last sponsor of a public banking bill. That was actually last year, and I'm going to talk about that in a moment. But that's the last sponsor that's been in Maryland, and so probably getting with that network of people that were involved in Delegate Gutierrez's efforts would be to Maryland's advantage. You also want to sit down with your elected officials. City council members particularly, we have found, have been incredibly receptive, and they get it, and particularly if they are small business owners themselves, or if they're community organizers, activist types, who have the same values as you. But also, we have found that that small business owners definitely quickly understand the need for liquidity and credit in their communities, and that's what public banks can provide. And finally, there's really no substitute. I'm going to say this a lot. You need people like Joshua Harris running for office at every level that you can possibly find, who are openly and already advocates of public banking. Elected officials tend to be very risk averse about things that they're not familiar with. And so the vision of public banking is such that, again, people are very easily convinced. And so it's a good idea to get elected officials who are running on the platform, who get it, and who are going to stick with that agenda when they get elected. Enabling laws are statutes that authorize the creation of a public bank. And so this is the Gutierrez legislation, which was introduced last February 2016, so 2 Februaries ago. And that legislation died in the House Committee on Economic Matters. Committees, as we'll talk about a little bit, are really where a lot of things live and die, as many of you know. But this bill would have authorized a political subdivision, e.g. a city, to establish a public bank institution and act as an incorporator of a public bank. Also, the Maryland State Banking Task Force would have been established, and that task force was going to evaluate the creation of a Maryland State Bank, so a state-owned bank in Maryland, like the Bank of North Dakota. The legislation also would have laid out the various policy purposes, the reasons why. And for Gutierrez's legislation, that was economic development, stability, reduce costs, increase state revenue. All of those things are advantages of public banks, but there's a lot of other things that might be included in future legislation, future policy purposes, things about, for example, about sustainability, things about economic equity, reducing economic inequality, and things like that that are more people-centered than many of these policy objectives that were laid out in the 2016 legislation. Once that in the state legislature, if the idea of a public bank survives that committee vote, then there will be a feasibility study. In the case of city councils at the municipal level who have voted to explore public banking, that's always their first resolution or their first proposal that's put on the table at those city council meetings. At that point, what happens is they create feasibility studies. And as I said, feasibility studies are a real mixed bag. They can produce the findings that you need if they're done well, but they can also serve to sort of throw a block in the process. Part of the reason for that is that these consultants, there's a consultant industrial complex, if you will, a group of consultants around the country that get hired by local governments, and part of the sort of game is that they that everybody kind of knows everybody in that world. And so new ideas don't always get a fair hearing, and probably that expert class is fairly white and fairly bourgeois, and so you're going to run into some of those ideological issues. Nevertheless, you have to have feasibility studies. In many cases, it's a regulatory requirement for the way that city governments are run, and so you can't really avoid them. I would urge people to read Santa Fe's public banking feasibility study, which also came out last year, which concluded that the city could save $24 million over 7 years. That's just on the city's own financial expenses. It's not, and I think that the study also included the potential dividend that the public bank might make. But the study did not include the economic impact in Santa Fe of overall economic development that a public bank was going to facilitate. So, for example, if the public bank helps open 10 small businesses in the city of Santa Fe, which, for Santa Fe is a pretty significant amount of businesses, then that economic development, that tax base, the various ways in which the entire community financially benefits is not going to be included in the feasibility study. It might be included in the projections of some other study. It might be included particularly if the activists who are involved in the public banking movement demand that there be accountability for all of those things. Otherwise, you're not typically going to see sort of the long-term benefits included in a feasibility study like that. And of course, as I said, those consultants have a particular political ideology, and when I say unstable meanings of what expertise actually is, I guess that's just another way of saying that this world of consultation, that municipalities tend to use is a world, it occurs in a free market sort of atmosphere where these consultancies sort of shop themselves around. And so studies can slow down movements, they can throw roadblocks. So you need to be aware of some of the some of the drawbacks and some of the risks that are going to be taking, and be vigilant. The solution to that is to have elected officials who are committed to public banking, and the solution is also for those groups who are pushing it to stay involved in the process and to make their own recommendations as to how these studies should be conducted. Once you actually vote, there's there'll be a final vote, and if a public bank is chosen, then it needs to be capitalized, it needs to be collateralized. Capitalization is exactly what it sounds like. It's the startup capital, but of a bank. And these are Maryland statutes. Capitalization, if it's 50,000 people or less in that city, then it's 750,000. And if it's more than 50,000, then it's 1.5 million. And there may be additional requirements. This should not be treated as exhaustive, because typically there are regulatory and agency requirements that might be bigger. There are federal requirements that might override these things as well. And a commercial bank has to have in surplus an amount that equals at least 20% of its required capital, so an additional 20% of the 1.5 million. And then that's all capitalization. The last paragraph there is collateralization. It just says this is how you're going to secure the money, the state money that is on deposit. And that's how that's a rule specific to the collateralization of state money. As we remember from last week, a very important point is that it is state money, or it is government money, municipal or state money, that is going to capitalize the public bank, and it's going to be where those government entities put their money to protect that money from Wall Street and to make sure that it is used, and that those deposits are either used to capitalize, or those deposits are otherwise handled in a safe and secure and conservative way. And then finally, you have your bank charter, which typically includes your articles of incorporation. The bank's a business, so you have the articles of incorporation, whatever mandates, whatever it is that this bank is supposed to do and supposed to be used for, and we at Commonomics have said you can. You can put particular social purposes into those mandates. And then finally, the rights of the bank, because the bank, again, is a business entity, and so business entities, as we know, have rights in America. And a charter is also important because it's the basis for citizen enforcement of the public bank's fulfillment of its mission. So let's say that you incorporate a public bank based on the process that we've just gone through for several minutes here, and you incorporate the bank. And then at that point, the president of the bank, even though they are a public appointee, starts taking it in the wrong direction. Or maybe the legislature, or maybe the city council starts taking it in the wrong direction. Maybe they do some of the things that they did, that the North Dakota government has used the Bank of North Dakota to do up in Standing Rock, which is, finance rubber bullets and things like that. And so, or maybe the bank stops lending in ways that are in the community's interest or meeting those communities' needs. It starts to behave in some way that's not consistent with its original charter. Well, citizens groups, citizen enforcement of the bank's fulfillment of its public mission can happen in many ways, including by simply being able to sue or petition and say, look, the bank is violating its charter, and the charter is the primary purpose of the bank. It's the reason that the bank exists. And so that's another reason why the chartering process of the bank is important. That's the end of this section. So if you have a question, you can take yourself off mute, and we can discuss whatever questions we want to discuss for a few minutes. Going once. I'm also going to check, see where we're at.
Hey, this is Andy. I have a quick question.
Yes.
What charters currently exist, even if the bank has not been implemented yet? So, like, does Santa Fe have a charter?
No, and it's unlikely that the charter is going to happen. You know, after the chartering is going to happen during or after the final stages of the process of creation. What has happened with Santa Fe is that they, completed that feasibility study, and now they're in the process of what's called an implementation study. I thought about whether to include an implementation study in the presentation today. It's another study in the process, and there are often one or more, studies in the process. Once that happens, once they sort of come up with an implementation plan, then there will be a final vote. And at that point, the bank can be created. And once it's created, you may have its advocates or, people might have been involved in pre-writing the charter before that creation stage. But there's nothing up at this point. There doesn't appear to be anything that would look like that. On the other hand, you could look at the Bank of North Dakota's charter, and that might help you, although the language may be a little anachronistic or archaic now. You can look at that, and there might be, and that might help. There's also just sample charters from private banks that you can look at as sort of a template for what a charter would look like.
Great, thank you.
All right. Okay, well, we're going to move on to political strategies, and I want to start that section on political strategies with this story of what happened in North Dakota, because I think that in many ways, this is what it's going to take to transform our nation, particularly through the process of its city and state governments, into at least some places, some rational places that have banks that serve public needs, banks as public utilities. And so what happened in North Dakota is a fascinating story because it speaks to, well, if you look at the way in which this happened and then look at the fact that 100 years later, the very conservative government of North Dakota and the very conservative citizens of North Dakota still want their public bank and their mill and elevator, which is a grain mill and elevator that is also public, that is also quote unquote socialist. The fact that the state still wants those things speaks to the magnitude that is involved in creating something like this. But where much is given, much is required. And in this case, what was required was that a real movement to push forward a public agenda, a public commons-based agenda was what was necessary. And so when A.C. Townley organized the Nonpartisan League, became a political party, they ended up winning both seats in both houses of the legislature, both chambers of the legislature, as well as the governorship of North Dakota, and created the Bank of North Dakota and the North Dakota Mill, which were pushbacks against powerful banking interests and powerful agricultural interests from back east and from the Twin Cities and Chicago that were doing harm to the people of North Dakota. That's how this happened in this instance. I'm not saying that you have to form a revolutionary party and take over all of your state government, although it would help. But what I do draw from this is the necessity of building a genuine movement, of building a real movement of people who are not only signed on to the idea of public banking, but are signed on to the idea of public banking as a method of economic justice, as something that is designed to help common and ordinary people and to right the historical wrongs of our past. And with that in mind, the 5 things that I'm going to talk about, and I'm just going to go through them on this particular list, are as follows. Again, building a mass movement of stakeholders, a mass movement of stakeholders who understand economic insecurity and so are able to continuously feed and strengthen and refresh the narratives, the political narratives that you're going to need to bring people on board and to bring elected officials on board with this amazing mechanism. There are other reasons to have public banks too. If people are capitalistic and they want to make, they want to be in an atmosphere where businesses are successful and there's a thriving market, a public bank actually helps in that regard. What it doesn't allow for is the excesses of finance capital, which tend to make some money for very few people and kind of kill the rest of the business community. And so it's actually, public banks are actually a very egalitarian or equalizing way of creating markets and sustaining markets. But at their core, what a public bank is a way of reconceptualizing what money is and what credit is in communities. And that means, also funding nonprofits, also funding farmers, even though farmers don't make money, also funding a number of other public goods as well by socializing the financial machine that creates wealth in communities. Second, you should work with other public banking groups around the country, but on your terms, keeping in mind your unique situation. And I urge anyone who's interested in what's going on in the public banking world to get in touch with the folks in Santa Fe. I'm happy to facilitate that, for people who are serious about having that conversation. But Santa Fe is Santa Fe, and their needs are their needs, and Baltimore's needs or Maryland's needs are their needs. And a lot of the more national-based think tanks and organizations that might be, including us, that might be pushing a public banking agenda are not necessarily going to understand or appreciate your situation. And so it's very important that you maintain your local autonomy even while utilizing and exploiting to your advantage the resources, the massive amount of resources that are available by, from national groups and also from all these local groups, all of whom are eager to share their resources because there's strength in numbers, because the more communities try to do this, then the more successful we will ultimately be. Again, number 3, get people elected to office. I don't know that there's a substitute for this. I have found that when people run on the agenda, they stay with that agenda. But if the first time they hear it is after they've been elected, then they might be an ally for a long time to come, but they also might fall into that risk-averse category of political officials that I talked about. They hear an idea, they say, oh, this might be good. Then the big bankers come in and they start screaming. And at that point, the risk-averse public official is going to say, might be better to do nothing, or might be better to throw a bone of some kind, but not necessarily do a public bank. And so you want to be aware of that. But if someone's elected, they're more likely to have internalized the values that we're talking about. At the study and implementation stages, you want to make sure that the experts that come in are as organic as possible, that is from their communities, from Baltimore, from the Maryland communities that are going to be doing this. And you want to make sure they're committed to economic and social and ecological justice. That is, that they have the same new economy, economic revolutionary kind of values that the grassroots organizations who are pushing for public banking are most likely to have, especially the ones that come from communities that have experienced the kind of devastation that Baltimore and other American cities have at the hands of big private banks. So you want to make sure that the experts, the people that are shaping the policy, are ones that also understand the human implications and the way in which our actions, tend to affect communities. And finally, you want to keep pushing the media message. You want to control the message as much as you can, including answering arguments, which we're about to get into. But this is a very important part of this. There's tons of stuff already out there that people can use as templates for that. When I worked with the Public Banking Institute, I know that we created many memes, for example, and the Public Banking Institute also has a press kit, media kit. It has how to write a letter to an elected official or a letter to the editor, and all sorts of things like that. Other organizations are going to have similar things. And again, those are just templates. You're going to want to create messages that are appropriate and specific and, really have a cohesiveness that's in touch with your community and the message that your particular band of heroes wants to put forward. And so before we go into talking about arguments and sort of answering some of those arguments, let me see if there's anything else first that I wanted to say. Yeah, there are a few other things that I want to say about this section. And I apologize for not having more PowerPoint slides for it, but you're free to take notes or ask me about some of these things later. When I talked about working with other groups, Oakland is another city that has made huge strides, again, gotten their city council to pass a resolution calling for a study. That vote was unanimous on the city council. There are other cities around Oakland, Berkeley, and other cities that are also very interested in public banks, and many of those cities' officials have come forward and sort of supported the work of Oakland as a possible launching point for other public banks across Northern California. And so Oakland is a city that is almost where Santa Fe is. Oakland's probably about 6 months away from being where Santa Fe is now on this question. And the other thing, I briefly talked about throwing a bone. So a couple of years ago, Vermont had a series of town meetings in which they talked about public banks, because town meetings are kind of the way that Vermont does some of its politics. And they did a straw poll afterwards, and there was overwhelming support for a public bank. And so Vermont went ahead and went through this process in the Vermont state government. And what happened was the big banks pushed back. The politicians who were committed to public banking pushed back against the pushback, and there was a lot of pushback and forth. And what eventually happened was something that was disappointing to the public banking movement, but nevertheless was maybe a little better than the status quo, than the way things were before, and that is that that Vermont beefed up its investment bank, basically its state development and investment program, not a bank, but its funds, and sort of promised to spend more development money in local economies and on the state. And that was sort of the bone that the state threw to the public banking movement in Vermont, which goes to show you that sometimes you fight really hard, you don't get everything you want, but it also shows the importance of being persistent on some of these issues. Just want to make sure there's anything else. I talked about how your consultants should be vetted by stakeholders, so those experts need to be experts that your stakeholders can really respect and believe. Really, this is about instilling leadership at every level. You want to make sure that knowledge and that vocabulary of public banking exists in elected officials, in people running for office, in people who are appointed to various offices. You just want to make sure that the message gets around as much as you can. It's about consciousness building. Public banking is an easy argument to make, and so particularly for those who experience chronic personal economic insecurity or who live in communities that experience a lot of economic insecurity, it's a very easy argument to make. And so it's a question of how to keep making it and keep pushing it, because you're going to get pushback, because the big banks the big banks are really the only people or the only entities that stand to lose in this deal. And so they're going to push back with everything they have, and they have a lot in terms of, being able to generate kind of the resources to make the bad arguments that they make against this, which is where we're about to go. But again, I'm going to go ahead and pause for a few minutes and answer any questions that anyone might have. Andy, or if anyone else wants to ask a question. And remember to take yourself off mute in order to do so.
Hi, this is Kai.
Hi.
I have a question. So can a public bank be operated in a way that continues the extraction of local wealth and severe inequality? And if that is possible, how do you sort of build in a way that tries to prevent that from happening?
That's a very, very good question. In fact, that is the very question that we asked ourselves at Commonomics last year when the Bank of North Dakota was used. And it was not the Bank of North Dakota's fault. The state allows for the use of funds and loans from the Bank of North Dakota for emergency funds. That's a good thing, right? I mean, it means North Dakota can bail people out in times of flooding, which happens all the time in that part of the country. Or if you have massive crop failure or different things like that, terrible meteorological conditions that ruin all your farms. There's all kinds of ways in which emergency bailouts are necessary in a society. In this case, the elected government of North Dakota, who are particularly bad on issues of class and race and the environment, used money from the Bank of North Dakota to fund to make up for a loss of federal funds, in particular with the cops and these militarized police up at Standing Rock. But that's not really direct extraction of wealth from the community. That's using the money that's in the Bank of North Dakota to fund police powers who protect those interests. That's a little bit different than what private banks do every day and what private banks do as a matter of their systemic purpose, which is extract wealth from the community through interest and through a high growth and shareholder mentality rather than a community stakeholder mentality, or by financing projects that do the same, by financing projects that are extractive or exploitative. And so the best way to prevent that from happening with a public bank is to create a charter and to create purposive legislation when you write the legislation saying that the purpose of the public bank is to do these particular things, and these are the mandates that the public bank has, and the public bank is not going to charge exploitative interest, and the public bank is going to give a dividend for any money that it does make, and that dividend is going to go right back into the community. And so the way that you prevent that from happening is by structuring those agreements into the charter and into the legislation, which is probably going to be a little easier at the municipal level than it is at the state level. But I would say start a public banking movement and see what happens. If you read Joshua Harris's economic plan for Baltimore when he ran for mayor, it was very clear that the public bank was going to be used for real just and sustainable purposes. And that's why I would think, I feel like Joshua's campaign and the economic plan of that campaign is really a model for the way that municipalities in particular should push public banks. Is that helpful? Is that a helpful answer?
Yeah, thank you.
All right, great. And Andy, did you have anything to add?
I'm good for right now. We have two computers in the same room, sorry. I'm good for right now. Actually, I guess I do have one question. Other than Joshua's platform on public banking, are there other people who have run for office on a similar platform that you can point out to us so that we can take a look at them?
Absolutely. And if you make a note of that, that's one of the things I would be happy to send along. That's a very good question, and the answer is yes. I think Joshua's is again revolutionary in its in the way that it pushes that agenda forward. And I know that he came into the race with a vision of what he wanted, and also was able to work with others in constructing that platform, and with his leadership, it really was pointed. But yes, there are others, including one of the candidates for Democratic nomination for governor of New Jersey, Phil Murphy, is another candidate who is running on a public banking platform in New Jersey. I don't know if he's still pushing it, but a year ago when he announced that he was running, it was a cornerstone of what he was running on, which could be a huge victory if he wins and continues to have that particular economic platform. So yeah, I would be happy to send you everything I know about candidates who are supportive of the platform of a public banking platform. And with that, we're going to go ahead and move into the third section, which is answering the arguments. And I just want to check our time real quick. That's great. And so there are many other arguments, and you can actually, I will, if you remind me, Andy, I would be happy to send some more links of FAQs, as well as a couple of articles that I've written, that I wrote for the Public Banking Institute blog last year, about a year and a half ago, I think, on the various arguments that are made. There's a certain uniformity of them, and that the reason that there's a uniformity of them is that there are certain groups like the Cato Institute that are very much against public banking because they're funded by people who make money off of the financial sector. And so they tend to recycle those arguments a lot. These are kind of the four basic ones. Public banks aren't necessary, the corruption, fraud, waste argument, the basic government bad argument, and also the idea that private banks, since they're more profitable, will be better for communities and better for the investment of those government funds. And so we're going to talk about each one of those in turn and just talk about a few message points that we would want to emphasize, and really just one of the things that I'm trying to do here is really just give you a sense of the pattern of the way these arguments go. And of course, the problem is that once these arguments are going, then you want to make sure that the media in your particular area is aware that you're coming back, your movement is coming back with really, really good analysis that's going to answer some of these very basic kind of frontline arguments that the big bank lobbyists make. There's this idea that public banks aren't necessary. This is often an argument that some of the more powerful community bankers in a community who might be skeptical of public banks saying, wait a minute, I don't understand necessarily what the problem is. And the thing is, they actually do understand what the problem is, but they believe in many ways that simply that private banks can solve any of the problems that exist, including problems that are created by private banks. And so I've heard people say public banks are a solution in search of a problem, which implies that we don't know what the problem is. But we do know what the problem is. Cities and states, municipalities and states for a few decades now have adopted the monetarism and the sort of neoliberalism that was pushed by successive Republican and Democratic administrations over the last several years. And because of that, they're running out of money, because they put their money in banks. They have Wall Street firms manage their investments. When they sell bonds, because taxation has become unpopular, when they sell bonds, those bonds are sold on the secondary market. Oftentimes money is lost, value is lost. They end up having to pay exorbitant fees, exorbitant interest. So cities and states are running out of money, and that is, there's a direct linkage between what the big banks are doing to cities and states and the broken windows and broken bodies and broken lives that you see in municipalities across the country. And part of that also is that private banks gamble with public funds, whereas I mentioned this last week. I urge you to read about what the banks did, what the banks and Wall Street financial industry did to Chicago public schools. It's, if you read about Detroit, the reasons that Detroit went into bankruptcy court, one of the largest bankruptcy cases in our nation's history. And again, you'll see that it's Wall Street. It has Wall Street written all over it. Even if they didn't do those things, private banks aren't lending to small businesses. It's getting harder and harder for small businesses to get loans. And farmers, one of the people I worked with at Farm Commons, which is another organization I work with, told me that they don't even have to worry about educating farmers about predatory lending practices, because there aren't any predatory lending practices in the farming sector. Why? Because there's no lending. There's so little lending. Banks, conventional banks will not lend to farmers. And so private banks aren't lending the money. PPPs there means public-private partnerships. And then, and also weak development bank solutions like the one in Vermont. These are the types of things that when people say public banks aren't necessary, they say it's because of private-public partnerships, or because states have development banks or development mechanisms. These are not the same. They don't have the power that public banks have to A, control and manage the way that wealth is created and used, and B, to lend and target lending in very low interest ways across the community. Development institutions or development agencies can do some of that, but they don't have the power to do that like public banks do, because public banks are banks. They can use fractional reserve banking to do it. Public banks will be corrupt, fraudulent, or wasteful is another argument. And this is sort of really just a derivative of the government is corrupt. The government is always corrupt. And yeah, the government is corrupt a lot. And democracy, obviously, is the solution to that. More democracy, not less, is the solution to that. But there are particular reasons why this corruption and fraud argument is, kind of funny when applied to a public bank context. It's because look at the level of corruption and fraud and waste that occurs in the big banking sector. Look at the LIBOR scandal, the LIBOR scandal. that wrecked the city of Baltimore. Look at the redlining that occurs. And all of these things occur with private banks. Private banks are much more opaque, that is, much less transparent than any kind of public entity. Private entities in general are much more opaque and much less transparent than public entities. Public entities have several layers of transparency. We mentioned last week, any of you who are teachers or bureaucrats, office workers, managers, whatever, in a public entity like a state-owned, a state entity, or work for the city, or work for a government. Any of you that have a government job know that you really don't have any privacy on the job. Your emails can be drawn up just freedom of information request, or simply through the legislative review process or judicial review. And so there would be very few places for professional bankers who wanted to be corrupt. There would be very few places for them to hide if they were working for the city bank, the public bank of Baltimore, or the state bank of Maryland. They would be subject to constant review and constant transparency, as opposed to that tug between private regulations with political will that happens in the world of private banking. It's actually kind of absurd to say, or at least to assert that private banks will somehow be less corrupt than public entities in this context. All one has to do is look at the last 10 or more years of banking scandals to know that the corruption argument is not a great argument, but it appeals to this sort of feeling that people have that they don't trust the government. We often joke that in the public banking movement, we're talking about government-owned banks, which are two of the least popular things in the world, government and banks. But in fact, most people trust their local government, and most people at least will know that they have a place to go for review if something does go wrong, which in the vast majority of the time that the Bank of North Dakota has existed, during the first few years there was some kind of corruption scandal. It got easily fixed. It was easily fixed. And so again, the idea that it's simply a comparison of the checks and balances that exist from public banks versus private banks. And again, this idea of giving too much power to the government invites a comparison that tells us that big private banks have a lot of power. In fact, it seems like they can't be reined in. It really seems like even creating regulations to rein them in often fail. And those banks not only have that power, they also exercise that power over government entities now. And so then the question again becomes, do you want to create banks at the governmental level, which is the government exercising financial power over itself, or do you want to leave that to private financial institutions that have an infinitude of shareholder interests that might be at odds with those public interests? And then the question really becomes, should the power to create and define money belong to a few private individuals, or should it belong to everyone? Should that power be primarily used as a means of making more profit, sort of creating money to make more money? Or should that be a public utility? That's a values question. And so in some ways this, how much power should the government have might also be a values question. But we do know that when government is done right, there's checks and balances that exist in the public sphere that don't exist in the world of finance capital. So even if this is a question, a lot of people will say, well, if you disagree with what a private business is doing, you can stop using that private business. You can vote with your dollar. And that is true in a world where there actually is some level of sustainable and easily flowing market competition. But finance capital does not thrive on market competition. It thrives on the elimination of competition. And so you really can't vote with your dollar. When you're talking about the financial sector, there's really no exit with your dollar. It's not like switching from Wells Fargo to US Bank is going to send some kind of message as to how the financial sector should act. And so, on the other hand, if the current city government misuses or does not competently exercise the power of a public bank, you can elect a new government, a different kind of voting. The last argument that people sometimes make is that the profitability of a private bank and the interest return, the return on investment of a private bank, since it's always going to be higher than a public bank, is going to be better for a city or state, right? So the city, puts its money into a private bank, it's going to get more back in interest. It's going to get more back in returns. And we've talked about how, last week we talked about this a lot, how profitability from high interest is not necessarily a positive social good. In fact, it's really not a positive social good. It's kind of one of the reasons why things, why there's so much inequality in society. It's one of the reasons why we're killing the planet. It's one of the reasons why the exploitation of labor exists, or worker exploitation exists, is this notion that you have to charge high interest. And so, the first thing is, well, yeah, a state might, in certain circumstances, when things are favorable, a state is going to get a return of high interest. That interest is going to be interest that was acquired in kind of bad and rough ways on people and on the planet. Lower interest means lower growth imperative and more sustainability, less exploitation. On top of that, the bank might just gamble your money and lose your money. And so that risk is also there, that a state is going to pay exorbitant fees, or a state is going to pay interest to borrow that outweighs the interest they're making from the money they invest, or there might be derivatives or interest rate swaps or other. By the way, I sent a glossary of terms to Andy, and he will post that. That's one of the many, many great resources that Banking on New Mexico has, which is the Santa Fe group. So when I say things like derivatives and interest rate swaps, I basically mean these sort of gambling schemes that Wall Street is involved in. And oftentimes market-driven development isn't the answer to our problems. And so, insofar as private banks tend to undervalue things like the nonprofit sector, or undervalue things like cooperative economies and cooperative enterprises, then a public bank is going to be in better shape to invest in things that are good for the community, regardless of their profitability. And finally, public banks increase the dividends to government treasuries, and we haven't talked about this a lot because I haven't been sure as to how people feel about tax structures and things like that in the state of Maryland or in the city of Baltimore. But one of the main arguments that a lot of people make for public banks is that they will result in lower taxes, people paying less individual tax of all kinds, because the financialization costs, the development costs all go down with the public bank, and because the public bank then pays a dividend back into the treasury every year, which funds all of these, can fund public programs and such, and decrease the tax burden course, you have emergency services, all of the other things that public banks can do that private banks are not necessarily going to do. And one of the story that I like to tell is that in most of the cities that have been affected by hurricanes and hurricanes or other big weather disasters have had New Orleans and cities on the East Coast and things like that. They've had to fund their disaster relief through bonds and through borrowing and through all sorts of ways in which they're borrowing money from private lenders. And so, when these disasters happen, cities and states end up paying for that relief for a long time. They don't just get money. They get some money, obviously, in the form of grants and disaster relief funds, but it's a fraction of what they need, and most of the rest of that is borrowed with really high interest, which sort of adds insult to injury when you're talking about trying to recover from those disasters. So private banks give a greater return of interest on individual investments. They do not give a greater return in terms of the social values or the long-term economic development or the public values or even the long-term financial sustainability of a treasury itself. And so the argument that the private banks are just better because you make more money from each individual transaction is really not a very good argument either. Those are the four most common arguments. And I would say in conclusion, and then we can talk about whatever else we want to talk about, that I would urge people to go ahead and get involved by, if you want to learn more and if you want to have a conversation about sort of the unique ways in which your movement can actualize its own potential in its own life, and the things that the community members want in your community, then please give us a buzz. You can contact me directly, Matt at CommonomicsUSA.org. Our main page is CommonomicsUSA.org, but then we also have publicbanking.org, which again discusses individual initiatives that we're involved in. The biggest one that we're involved in right now is California. Again, I did not mention cannabis in this particular session. Last week we talked about it a little bit as one of the services, one of the sources of capitalization, and B, one of the services that a public bank could provide is it could be the hand of the government on that cannabis money to build an additional wall between cannabis-related businesses and just in case the Department of Justice or other federal organizations decide to put the hammer down or try to put the hammer down on cannabis-related finance. So that's one of the things we're doing at Commonomics USA. If people are really interested in that too, we could do an entirely separate webinar on cannabis banking as part of the public banking initiative. But please get in touch with us if you have more questions. We're committed to working with the values of communities like yours. We're not coming in here with this scheme that a public bank is going to create a bunch of millionaires or give everybody free money or anything like that. We think that public banks are mechanisms of community justice and community sustainability. That's what we would like to talk to you about, and so we're readily available to have that conversation. Of course, you may not need us. You may say, we've got this, and you go out there and push, and in that case, our resources are yours for the taking, and we're happy to provide the materials that we do provide. But if you do need us for deeper consultation, we're available for that, and would eagerly embrace such a journey with you. So with that said, again, I'll open up for further discussion or comments or questions. And again, we will be putting out some links and other things. This webinar will be available as a video probably within the next couple of days. We'll go ahead and post it to YouTube and provide it to Andy. And I want to thank the Baltimore Greens, as well as really everyone who's been involved in the public banking movement and who's been putting forth an agenda for economic justice in this and many other ways.
Hey, Matt, before you finish, I do have a question for you, if you don't mind.
Sure.
I do have. So I was talking with a guy here in Baltimore who works for MECU, a local credit union, been around, I think, for about 80 years. And he says that really the company's effort is to try and focus their lending on Baltimore and the immediate surrounding region as much as possible. This is like the goal of their, at least as far as he tells me, of their credit union. And yet he tells me that most of their investments, most of what they do with their deposits end up being confined to mostly Maryland and mostly the Mid-Atlantic. And I'm wondering, does that mean that there are some challenges to overcome when it comes to pooling assets from, say, one municipality? So in the city of Baltimore, if we want a public bank in Baltimore, how do we bring together enough assets to really make it meaningful?
That's a really good question. The first thing I would say is we think credit unions are great, and public banks can actually underwrite credit unions and community banks, because a public bank, because it is a government entity, is going to have a great deal, much greater lending power and much greater resources to help other businesses, including banks and credit unions, with things like regulatory compliance and underwriting their loans and keeping them afloat. And there are a number of other reasons why a public bank can do a lot of things that really go above and beyond what a credit union can do, which is confined to lending its members money to its members. However, your question was about the scaling of and the way in which a public bank can build a great deal of financial power. And one of the things that you mentioned is that there were other communities involved, and so a public bank need not be confined to one city, or it can be located in one city, but can serve other cities in sort of pacts that exist. I know that California law allows for the creation of joint management authority between cities and counties that creates these sort of joint entities. And perhaps Maryland has a similar provision for joint powers authority the way that California does. But even if it doesn't, a public bank can be chartered in such a way as to serve multiple communities. And again, because that public bank has the power of fractional reserve lending, which then is backed by the full authority of the state or the government entity that supports it, then a public bank can do a great deal of good in terms of, once it is capitalized, in terms of that investment. There's always going to be limits to what any particular bank can do, but since we're talking about the government creating its own bank, then the scope of that can be defined by the entities that are involved in it. And so, I think that I guess for further discussion, I would be happy to make sure that Andy shares the resources that he has. I would urge everyone, like I mentioned last week, to read the book The Public Bank Solution by Ellen Brown, and particularly read it with sort of a feeling in mind of how will this apply? How can I apply some of these lessons to Baltimore or other cities, or to the state of Maryland or other states? And there are varieties of ways in which one can answer that question of how you can expand that scope. But it's something that public banks would be well equipped to do. All right. Once again, I want to thank everyone for watching. Please get in touch with us if you have more questions. We're happy to help. There's also a lot of other great organizations out there that are pushing this idea, and we hope that these 2 webinars have been helpful. Thank you very much.